Hey guys, thanks for clicking on this video. Okay, and friends, I'm gonna be honest, most of the time I feel like this in the stock market. This is how I feel a lot of the time. And I'm going, is this the right move? Should I do this? I don't know what to do. But luckily, being like this, I've made a lot of good decisions too, especially this year. But with this year in the stock market, there's a lot of days where I feel like this and I can see what's happening in the stock market. And so what I'm trying to say, we've seen a lot of SPAC stocks this year, and every SPAC stock, even if the company was something I really did not want to get into, I didn't even really agree with the company and what the long-term aspect of what it was going to be, X whatever, I still watched all these SPAC companies blow up. There's so many SPAC companies right now that I can name that I'm like, why is this thing like $30, $40 right now? The company hasn't even made a dime. That maybe they sold some t-shirts and some stickers, but why is their stock this much? But I also get people don't want to miss the train. They don't want to miss out, and I get that. But this is where the new investor meets the SPAC stocks. And this is where the new investor might learn some lessons with a SPAC stock. Now, I'm not trying to say anything bad about SPAC stocks this year, because SPAC stocks have been very good to me this year, and honestly have probably been about 2/3 of my portfolio this year and growing it. But the thing that I've learned about SPAC stocks this year is that in the very beginning, there's a lot of hype, and usually there's a downtrend, and then there's a big uppour, and then it somewhere settles in the middle somewhere. So, with BFT merging with PaySafe, I truly believe this is going to be a SPAC stock that is going to stay high and go high. Because we're dealing with a stock that is going to be a global stock that's going to deal with a lot of transactions, and it's taking almost two thought patterns right now with how people pay in the world. So we have PayPal. Everybody knows about PayPal. PayPal is used in a lot of big business transactions, a lot of retail action. And then we have Venmo. Venmo, every person knows about Venmo. But what's the thing about Venmo that stands out? Venmo is for the younger generation. Everybody that's younger knows about Venmo. Venmo's the, hey, can you buy me lunch? I'll send you $5. Hey, can you give me this shirt? I'll send you $20. PayPal's not really used like that. PayPal's for like, I've got to pay my cable bill. I bought this Bluetooth speaker for $50 on Amazon, eBay, whatever. I'll use my PayPal account to pay for it. Well, now we have PaySafe, and PaySafe is merging both those thoughts and both those worlds together. And I use the word is very lightly because they have been doing this. They're just continuing to do this in a bigger manner at this point. And with the Foley acquisition merger, this is really going to push things further and further into that. So right now, the majority of people have no idea what PaySafe is. They have no idea that it's a company. But think 5-10 years from now, I really think this could be a household name, PaySafe. And what we know about history looking at companies, there's always a company on a company they always take an idea from a company and they make it better. Well, this is what PaySafe is doing. You know, they're taking the PayPal, they're taking the Venmo, and I know there's other ones in the middle there, but I'm using the ones that, you know, are household names. You know, everyone knows Venmo, everyone knows PayPal. Older people know PayPal, younger people know Venmo. And here comes PaySafe up the middle. It's grabbing both those and it's combining them. So this sets me in my thought pattern of this could be a huge stock. And the reason I said I made a mistake on my thumbnail, the reason I said that is because I was thinking into the future. Every stock that I buy into, I have an idea of what I'm gonna do that. I short stocks a lot. I will do that. I will buy 50 to 100 shares of a stock, and then when it hits a certain amount to where I can make a 20 to 30% gain, and I really don't care about the stock that much, I'll get rid of it and I'll take that money and I'll pour it into another stock. Like this stock, for instance, PaySafe. But the reason I say I made a mistake is because I think into the future and I go, I should buy as much of this as I can right now. There's things in my portfolio that I think, this may go a certain way. Well, I'm thinking, should I really take a chance with that, or should I take a chance on something that is pretty much almost guaranteed to work? I've already made a mistake in not buying more of it when it was $10, $11. 2 months from now, I might be saying, I made a huge mistake not getting more of this stock. I've already been in that situation so many times this year with the stocks like that. so many spec stocks, EV stocks, spec stocks, you know, whatever they've turned into. I made the same mistake with DraftKings. I said, you know, this is a neat little thing. I like this, but you know, this is going to take some time. Well, look what DraftKings did, and look what it's doing. It's doing great. But pulling all this together, what I'm saying right now, do I think PaySafe is going to be a, you know, $100 stock even by this time next year? That might be a little drastic, but do I see it being a $100 stock? Maybe more in the next 5-10 years? Yeah, I do. Guys, the Foley merger with PaySafe is coming up very soon. It's set in the first quarter of 2021. We know that. There's no bad news. Everything is going according to plan. And more people are finding out about it. More and more people are making YouTube videos. And this is what will drive a stock up right now, because people are going, I don't want to miss out. I don't want to miss out. But guys, that's what I'm seeing with this. This is my thought. This is a stock that I'm going long term with. I'm not expecting this to make me rich this year or the next year coming. But 5-10 years from now, if I were to even have 100 shares to 200 shares of this, I would feel pretty good about that in my portfolio. And honestly, with every spec stock this year, this is the one that I feel most comfortable in. And I have invested in a lot of spec stocks this year, a lot of EV spec stocks this year. I even invested in Virgin Galactic when it was a spec stock. But to me, this is what's fun about investing. This is the fun part of investing. This is the long-term investing. Getting in there before things get really crazy and having your position and say, yeah, man, I got in there around, you know, the $11, the $14 range. And you know, the stock is X whatever at the time then. And as the stock goes in the future, we could even talk about stock dilution, all that sort of stuff. But that's why you want to get in cheap, and that's why you want to get in big and cheap and have your position and just ride the roller coaster. But friends, I hope that hit somewhere. I hope that was good. I just want to put my thoughts out there with this. I have a lot of people asking me what they think about this. Anytime you invest into a spec stock, it's always scary. Trust me, it's scary. Because most spec stocks, like I said, have not even made $1 yet besides the t-shirts and stickers and coffee mugs they've sold. PaySafe is actually making money. They're actually a working company. This is already happening. This Foley acquisition merger is just helping it, pushing it along, giving them money to do what they need to do and be a global company. But friends, thank you so much. Remember to be positive, be you. God bless you, and thank you so much for taking the time to watch this video. I really do appreciate it, and I hope you have a great day. I really mean that. Bye.